Hey guys, Vinny from StockFacts, and today's video is about how over the past two and a half months, I am up almost $11,000 and 150%. Let's go over, I have a list here of lots of different trading catalysts as to why I was able to be that successful. Number one is that I've been home the past 2 months. And I was laid off of work right around the beginning of November. And obviously being home, being able to study and research and do my due diligence is definitely the first factor. I'm not fooled into thinking that it was 100% my skill, which I try not to only let it be that. I try and have as many catalysts and variables as possible stacked in my favor, as you see what we're going to get into here on this list. Number two was the markets have been hitting all-time highs the past 2 months. You know, they've been slowly rising, which for anyone that's a full-time trader, and even people obviously that are part-time traders, have been making a lot of money. Number three, like I said, I go out of my way to try and make sure I stack the deck in my favor and find catalysts that help me generate profits. One of the first things is something I look at every single day are the insider trades, and I use finviz.com and openinsider.com. Let's jump over here to finviz.com so I can give you an idea of what I'm checking out. Over at the top, click on Insider, and then I click on Latest Insider Trading. And I click on buy, only buy. There's a saying by Peter Lynch that there's many reasons for an insider to sell his stock, but there's only one reason why he buys, and that's because he's going to make money. As you can see here, they list it by ticker symbol, who the person was that made the trade, what their relationship to the company is. And what I check out is the value. The total amount that they have spent, not necessarily the amount of shares. Pretty much anything in the high six figures to millions is something I pay attention to and jump right on. One of the only hurdles I've run into several times actually with the insider trades is some of them, their volume is so low. Like they might have a trade that sometimes they do it late at night. See right here, 6:23 p.m., 5:12. The volume is so low at that time, and then even the next day early, you know, I'll wake up sometimes at 4 o'clock, 5 o'clock to see if I can get into some of these trades, and the volume is still so low that there's no one on the other end that's selling shares for me to buy. So, and while that's going on, the people who do hold the shares, the percentages are going up. But other times I've gotten in right away. Like a few weeks ago, I made a play on GameStop because there was there's an investment by I think he was the co-owner of Chewy. He had a stake in GameStop, and the next day it went up like 25%. I made like $700 or $800 on that trade. And the other website that I use is called openinsider.com. Another thing I check on the regular are the SPAC merger votes, which is actually a few coming up this week. On Tuesday the 19th at 9 a.m., OAC is merging with HIMS, which is a company that has early investors like Peter Thiel, J-Lo, and A-Rod. That is a $1.6 billion deal. On Wednesday, we have the biggest SPAC merger deal ever, which I believe it's worth, let me see, $16 billion. And that's GHIV merging with United Wholesale Mortgage, who is the #1 real estate company in wholesale sales. And they're #2 overall in volume behind Rocket Companies, which I believe is a company that hasn't caught on yet, but they are obviously one of the biggest mortgage companies in the country. Number 3, Wednesday, January 20th, 10 a.m., ACAM is merging with CarLotz, which CarLotz is actually looked at as a disruptive innovator in that field because they sell used cars and trucks based on consignment, which is something interesting. There's a lot of like sneaker shops that do that. One of the other factors I look at all the time are when lockup periods end. Let's take a look at what lockup periods are first. The lockup period is also known as a lock-in, lock-out, or locked-up period, and is a predetermined amount of time following an IPO where large shareholders, such as company executives and investors representing considerable ownership, are restricted from selling their shares. So a company goes public, and then a time frame is set, whether it be 1, 2, 3, however many months, that they're not allowed to sell their shares. A lot of times when that date is coming up in the days leading up to it, and on the day the shares expire, the company is usually in the red, and it drops. It may drop the days before and the day of several percent, 5, 6, 7, 8, 9, 10%. And usually after that happens, it jumps back up. So I go on to marketbeat.com. They have a section there that shows all the lockup period calendar, and I will pay attention to those and get in some positions depending on some other factors, and what kind of company it is. I'll just look at a few different things, but it's a chance to get in on not the bottom ground, but the bottom of a run necessarily. Another thing I check, not necessarily on a daily basis, but I check the calendar, is for FDA drug approvals, and it goes to fdatracker.com. Right here, as you see, we have a few coming up: January 20th, January 22nd, January 28th. Merrick is one of the companies. Obviously, if you pay attention to the market, this is a catalyst that can make a stock jump massively. I'm talking like over 50%, 50, 60, 70, 80, 90% sometimes stocks jump when they have an FDA approval. So definitely check this calendar. Once again, it's fdatracker.com. Another one I check is when offerings are closed. Usually when a company announces an offering, the stock drops heavy, and if you're into shorting, you could make money on that right there, and then make money on the come up, because there's nothing fundamentally wrong with the company unless they're doing, there's two kinds of offerings, the good one and the bad one. The good one is when the company is trying to raise funds and reinvest into their own company, reinvest in R&D or possible mergers or acquisitions or building a factory or a building. The other kind of offering that's bad is when a company raises funds but they have to pay off debt or taxes or meet salary needs. I haven't seen many of those lately, even though the good offerings, the stock still drops, which is sometimes amazing to me. I guess there's this idea, probably because of the dilution of shares, that the stock drops, but fundamentally there's really no reason that it should drop other than the shares. So it's gonna pop back up, so pay attention to that. Jim Cramer, there's opinions on that there about Jim Cramer, some good, some bad, but when he has a particular guest on from a company, a CEO, or he does a feature on a particular company, the stock moves. I've been watching his show, and it's like 6:17 p.m. I'm here on the East Coast, and he's doing a feature, and I'm looking at the chart of the company he's doing, and boom, it jumps up 5-10%. So anything that you can use as a catalyst for you to make profits, there's nothing wrong with it. Do it. Pay attention to all of these things. And like I said, these are the reasons why I've made almost $11,000 in the past 2 months, and pretty much all swing trading. The ARC emails, they go out every single night. When you look at the ARC emails and you see that they've bought into a new position, the stock jumps massively. When they just bought into skills, boom, popped up right away. I think like the email went out at like 6:18 p.m. and at 6:20, the stock jumped like 10%. So definitely subscribe to their emails, and you could also check on lucidtracking.com, which is a complete and total breakdown of all the ARC ETFs, all the buys, all the sales, which ETF, which stock they hold the most shares of, which stocks they spent the most money on. Another factor, catalyst that you could check out are tweets and posts. Elon Musk recently tweeted out, use Signal, which he was referring to the messaging service because it's a private messaging service. But everybody thought that he meant the company Signal. It's called Signal Advances, and this was just ridiculous. Right after he tweeted that same day, this freaking company, it jumped up 526%. The next day, jumped up 91%. And the day after that, another 438%. The day after that, which was January 12th, it fell 74%. And then it jumped back up. It jumped back up 2 days later to another 36%. And this company had nothing to do with anything. Everyone just thought it was some kind of sentiment they believed. So, obviously you have to be subscribed or turned on the notifications for certain tweets, which I actually have the notifications for a few people in the finance sector, like Chamath Palihapitiya, he also did the same thing. He tweeted out that he was investing in ACTC. And let's take a look at their chart and see what happened when he did that. Boom, it jumped up 106% that day. It was actually halted because of so much volatility. He was on CNBC and announced that his SPAC IPOE was merging with SoFi. And again, it was halted. It jumped up significantly. Check out Google Trends. See what's going on in the world. There's a group of guys called Dumb Money on YouTube. Check them out. There's Dumb Money and Dumb Money Live, same guys. They do what's called social arb trading or social arbitrage. They basically figure out what's going on in the social sector based on the economy or things that are hot, like the Pokemon cards that have been kind of coming back lately. Over the pandemic, they invested in Crocs because they knew everyone was going to be home wearing comfortable shoes. Things like that. The Wall Street Bet subreddit just recently with GameStop and their short squeeze. There were numerous amounts of fortunes that were made because of this short squeeze. GameStop had a 50% spike. So make sure you're joined up with the Wall Street Bet subreddit and check it every once in a while. There could be something going on, in the shadows, and you want to be part of it and take a chance, maybe throw $500 on something. I've done that before. That I don't like that word gambling, but let's be honest. Part of this game is taking chances. YouTuber Dead Inside, he tweeted. He didn't tweet. He posted on YouTube he was going to invest in CPSH. I think I have that chart over here too. And when he announced that was happening, boom, 113%. The next day, 9%. The next day, 32%. And then the fourth day, it's up 1.51%. It still hasn't come down. That was this past week. But any catalyst you can use into your advantage, do it. Jeremy from Financial Education, he used to make videos about Planet 13, which is a cannabis dispensary. And the next day, Planet 13 stock would always spike. Another factor or catalyst that's going to be coming up this week is Joe Biden inauguration, which is on January 20th. I expect that on that day, maybe even the day before, that EV stocks, cannabis stocks, and new energy stocks are going to be moving because he's associated with being in favor of those sectors. So I'm definitely going to be getting into some positions based on those stocks. Pretty much my strategy with picking out stocks when I go on to the charts to pretty much figure out where am I going to go, what stocks am I going to pick. Everything that I pick is from what's called a bottomed out, or there's a strategy called bottom up that's kind of similar. As you can see here, a bottomed up strategy is when you look at the companies first, then the industries that they're in, then the sectors, and top down, which is the opposite, is when you're looking at the government, the economic situation as a whole, and then what sectors, maybe the time of year that are going to be beneficial. Where when I go onto a chart, I want to look at I check out the top winners in a chart, and then I look at the top losers, because I look for charts that look like this, where they are in a bottoming out trend, and then they're going to start to rise up again. And as you can see here, I've made some drawings where, as you can see, this stock ISSC, it was bottoming out. It kind of had a little bit of consolidation, sideways movement. Boom. And as you can see, the the indicator that I use is called PSAR. Let's actually just take a look at what PSAR is. The parabolic SAR attempts to give traders an edge by highlighting the direction an asset is moving. The parabolic SAR was developed by J. Wells Wilder Jr., who you guys should definitely check him out. He's like the godfather of technical analysis. Is used by traders to determine trend direction, which is exactly what I'm looking for, and potential reversals in price, which is the other thing I'm looking for. This technical indicator uses a trailing stop and reverse method called SAR, stop and reverse, to identify suitable entry, exit, and entry points. A dot placed below the price when it is trending upward and above when it is trending down. As you can see here, this indicator pretty much matches up with how the stock is going to be going. Now, obviously, only using one indicator, and if everyone used the same indicator, we should all be making money, right? Obviously, that's not the only factor here. There's a lot of other decision-making points that go into this. But for the most part, this indicator has steered me in a lot of right directions. And honestly, with just looking at the chart, if you just look at this particular chart here, you could see where it went down, it consolidated, it popped up. And then it went down, it starts to consolidate a little bit, and even had a big pop-up. It showed you that confirmation right there. Let's jump over to another one, and look, same thing here. It went down, and then popped up, and then it started to go down again. It has, especially lately, this doesn't always happen, but lately, where over the past year, a lot of stocks have been moving like this, and even a lot of sectors have been moving like this. This is the EV sector has been one where they were on fire in October and November, and then they kind of settled down, and now they're starting to come back a little bit. Here we go. IDEX, Ideanomics, same type of thing. Had a big spike, and then it came down, and it kind of settled, a little bit of consolidation, sideways movement, and boom, starting to spike again. Ticker symbol HCDI. Same thing. Look, lots of sideways movement, and then boom, down. What's going to happen now? It's going to recover. The same way when a stock is going through an offering and it drops, it's going to recover. Ticker symbol ACRX. Downward movement following the SAR, and then boom, big spike. Now, some of these big spikes may be another variable or catalyst, some kind of fundamental news. Ticker symbol CLRB. Big pop. Some consolidation, sideways movement, and then another big pop. Then it moved down and even start to move up a little bit. Ticker symbol RCON. Look, downward movement, pop. This was actually a big green day, which means when it's red and it's a green day, that means that it closed lower than it opened. Some more moves down, and then boom, pop again. Ticker symbol IBIO. Downward movement, consolidation, a little bit of a pop. You guys get the idea. For me, this has steered me right. I'm always checking the top losers for the day, because the ones that they're on like a negative run, they're on a red run, they are going to have a trend reversal. And I've lost count of how many times, honestly, I've gotten in on the very bottom and rode that stock for several days, making $600, $700, $800, $900 over a week just from one stock. I have several stocks where I've gotten in and out of them based on these trends, and the totals are where I have, I think, like Sundial, I've made like $2,500 from Sundial. From IDEX, I've made $2,500. Not all from holding it in one period, from riding with it, getting out when I feel like it's going to bottom out, wait for it to start to come back up, get back in, and ride it again. This strategy that I use, like I said, it works best in a trending and momentum-based market, which, like I said, we've had a lot of this year. Some of the most powerful moves in the financial market occur when a trend builds via sentiment, or AKA sentiment, which I feel sentiment is the #1 reason that a stock moves nowadays. Like, look at Tesla. That's just ridiculous. That is because there's so many people behind it and supporting it, besides the fact that it's a great company. Another thing that helps is learning the daily flow of the market. As we know, when the market usually opens at 9 a.m., there's several stocks spiking up. There's several stocks dropping down, so it could be a volatile time. Maybe you can get in a certain one around that time. But if you want to get into a new position, I usually wait until the 12:30 hour or power hour. Usually around from 10:30 to 11 is when stocks start to trend down. And then at 12:30, they pop up. This is when people are coming back from lunch. And then they usually kind of die out a little bit. And then power hour comes, 3 o'clock, they pop back up. Which is also, I know, a time that a lot of day traders, they only make their trades around the 12:30 or power hour time, because that's when stocks are rising. When I choose a stock, a lot of times I buy in the after hours, because I'm looking for, a lot of times what happens is during the day, it's like the last red day of a stock, and then it shows that it's about to reverse in the after hours, it turns green. So I may get into a stock in the after hours, and then the next day, if it doesn't show signs of continuing to go green, I can sell out. But because I bought in the day before, that's not a day trade, so that saves my day trades. I save my day trades to get out of bad positions, where when I do buy in on the same day, if something starts to turn bad, to minimize losses, I'm out. Another thing I take a look at is a company's free float, which is the total shares available to the public. Now, the higher the float, the less volatile a stock is. Some examples of this are Apple, Pfizer, Walmart. This is why you don't see giant spikes from these companies. Let's actually check Apple out. As you can see here, a big day for Apple is anything over 3% for Apple is a big day. As you see here, most of these green days, it's kind of hard to see up in the corner over here. It's 1.24%. Here's a big day for them, 5%. 1.20, 1.23, 0.29, 3.0, 2.11, and even the red days, look, 2%, 1%. And this is because they have a high float. High floats are usually very good long-term investments because they're a little bit more predictable. Don't get emotional about stocks that you don't like. Like this past year, a lot of people had a lot of hate towards Nikola or Hertz because they went bankrupt. But just because a company may not be necessarily doing the right things, or you don't even like the company or what they're about or what their sector in. Like, I know some people that refuse to buy into tobacco companies. That's okay. But you can still make money on their stock in the short term, which only benefits you. Don't get emotional about stock. Like, I have plenty of people, I'm not touching Nikola. But if you look at their chart, they had a lot of ups and downs where you could have got in and out or rode some nice green days and made some pretty good money. A company stock they're different entities, where if you look at like Tesla and Ford as an example, Ford does like $150 billion a year in revenue, but it's a single-digit stock. The sentiment is just different there. Tesla, I think they only did $25 billion in revenue last year, which compared to Ford is not a lot, but look at the support Tesla has. It's a different entity. And the last factor I go by is your instinct and your gut, and that comes from experience. For many years, I have been a passive investor, and I've always studied the charts and looked at the charts, and in all of my free and spare time, investing in finance was something I've always been extremely interested in. Even when I wasn't trading, when I was just investing passively, I would still study and look at the charts just because I found it interesting. And all of that time led to a certain instinct that I have for the markets, combined with, all of these other variables, which honestly, lately I consider these to be a little bit more valuable than my own instincts, because these are variables that it doesn't guarantee, but it almost does, that certain stocks are going to go in certain ways. So definitely, take a look at all these websites, finviz.com for inside traders, spactrack.net for SPAC merger votes, the lockup periods on marketbeat.com, FDA approval for drugs, fdatracker.com, lucidtracking.com. Check all of these out every day. And believe me, you're definitely going to find a handful of plays. You may not find one every single week, but I've pretty much found at least one a week. A lot of times more with all of these, but you'll definitely find some over a period of time. I highly, highly recommend it. Thanks for watching the video, guys. Please comment, hit that thumbs up button, and subscribe. Till next time.